Good morning. This is Ken Long from Tortoise Capital, and I want to just describe an emerging standard practice that we're calling the trading chain or chain trading. This is a simplified form of the daily trading process that we teach in the day trading course. And so I start the day stalking the open by observing yesterday's close and the size of the gap, then using our gap stat that informs me about the likelihood of the size of the day overall. Smaller gap is a smaller follow through kind of a day. Larger the gap, the more volatility I'm expecting for the daily range. So the bigger the gap, the more interested I am in the trade that day. And so I like to start the day off by using our frog champions, which we talk about in the day trading course, the ones that show the greatest positive effect of using our mechanical frog system. These tend to be symbols that have large daily ranges as a percentage of their price, and they move intraday in longer intraday swings, if you will, so they're more trending during the day. And so you're more likely to get the full R move that we want to see in order to execute the frog. So I am using what I have called the hybrid frog. And the main purpose of this one is simply to use the best of the frog techniques and strengths in order to simply get started, get paid, and then get context for the day. In other words, I'd just like to get in the water, get wet, see how things are shaping out, and get paid to do it. This normally involves me bracketing the open with a minimum risk box that's a function of the frog box. I am leaning now towards using about 70% of the frog box on a given day and bracketing the open with that. And then I take the trade in the first direction that it goes, and it's not unusual to see the frog champions moving and hitting the entry somewhere within the first 15 minutes. And that forms the first link of the chain. And all I want to do is get started and get paid. And that's the only thing I'm looking at in that first trade of the day. So I'm not trying to multitask. I'm just picking the ones I like, a small handful, and I pick the first one that goes, and off I go. Now the chain idea comes about from the end of the first trade leading into the second trade of the day. And now typically the first hybrid frog trade that fires is a trending move in one direction. Let's say that it's down, and then we get paid. Maybe we get an R. And then that move will quite often trigger one of the patterns in the RLCO framework, and that's either going to be a continuation of that same hybrid frog move, in which case this leg down could be as big as this move down, so it's first leg down, second leg down, or we get into a P7 condition, which is the price has exceeded the third Bollinger Band to the downside, or we get a P1 regression line crossover, or we get a 1, 2, 3 move off the bottom. In any case, the move looks like a reversion to the mean. In this case, we're a reversion to the open, or to the middle of the river, or to the volume weighted average price, or some measurable move that is worth trading. And it is quite often the mirror image of the first hybrid frog move. So the second leg of the chain I'm looking at as being either a reversion of the first hybrid frog move or a continuation of the second hybrid frog move. After you get that second chain in, you start seeing potential trades setting up that are functions of the RLCO framework, or the regression line crossover, or a combination of the hybrid frog box. You could see it move off the high or low of the day. And what we find ourselves in is framing trades according to our preferred framework inside the range stat move, where we're working with the highs and lows of the day and using that to estimate reasonable returns. And that's the way I chain trade until about the lunchtime when I'm looking for drifting continuations of the strong trends of the morning, either up or down, or if we get a very quiet channel, I'm starting to look for P5 sideways quiet channels, or the special forms of that, the Z3 pinch and breakout, the Z3PO, or the Z3 pinch channeling trade, which is a form of the Z3PO that allows us to fine tune that entry even more. And I use that to get me through the lunch. And then the afternoon trade structure really is a function of the morning and lunchtime trends, where I'm operating within the range stat move, typically looking for highs and lows of the day. And I incorporate these insights from the longer term time frames from outside of today's price action by periodically checking the 30-minute charts for support and resistance information from yesterday, or the 2-hour charts to look at support and resistance from the last 10 days. And this is where the swing trades and their performance over multiple days gives me some insights into how to refine my understanding and appreciation of the daily trade, the inside of the day, if you will. Now, the use of the different regression lines of the longer term time frames, like the 90 and the 270, give us some insights about what's happening on the longer term time frames. So if we start approaching a longer term regression line, like a 270 minute or a 270 period regression line on the 3 minutes, is telling me something about price action over the last 10 days, for example. So I can see that information on my chart without having to shift the time frame. So if I see it approaching, I can shift and then get a deeper look. Or if you've got another monitor and you can multitask, you can certainly look at multiple time frames simultaneously. But that's what we mean by the daily day trading chain, where I'm just trying to get started, trying to get paid. I'll grab it without thinking, and then as soon as that exit has occurred, I'm already framing the trades for either a continuation and a re-entry in the same direction, or a reversion back to the opening or the Bollinger Band mean and river. And I'm prepared to take that either way, and then use that really to start setting up the context for the day, the size of the moves, what else is going on, finding what the other sectors are doing, the market's doing, what volatility's doing, and then using the range stat as a way to frame the daily playing field, transitioning to a lunchtime frame of mind, that pause that refreshes, and then fine-tuning the afternoon trade as a function of what happened that particular morning. So let me give you an example of what that looked like this morning. Okay, so let me shrink that down just a little bit. Sorry. So what we have here is WYNN, W-Y-N-N. That's one of our frog champions, and I'm using a 70-cent risk box. That's 70 cents in the yellow. So here's the opening on this blue line. This was yesterday's close, the red line. So there was a small gap up. This was the opening, so I put a 70-cent box on either side of the opening. I take the first 70-cent move from the open. In this case, it was long here. And then within 2 minutes, we've got an R, and we actually have almost 2 R in hand. It sprints north. As it starts to fail, just cash it. That's a 1.5 R. And then I'm noticing things here in the yellow. I notice the 270 is rolling up. I notice the dragon is rolling up. I notice all of this volume up here. I see the 10 period regression line has rolled over, crossing the dragon. Now I'm interested to see, will it hold the open? It comes down, it holds the open, it holds support at the 270 and the Bollinger Band mean, just like it should if it's going long. So we get this move. This is a possible entry here, a 1, 2, 3. I wanted to see the RL10 cross the dragon. It did. Found another support here at the Bollinger Band mean, and then price leaves the dragon. The 10 has left the dragon. The 30 is out of the dragon. I see a series of 1, 2, 3, two higher highs from the open. So I buy it here with a stop here, and I just manage that stop all the way up. This is where if it was going to fail, it would fail. It didn't. It held a higher support than here. I take a second position. Don't do this at home because I don't have 2R in hand, but sue me. I take a second position here managing it to here. At this point, I'm in the money on both of these, so I lock in my stop right here while it's working well and maybe even starting to stall. And then we end up exiting a little bit later here at about 88.70, which gives me another R and another half an R. So that's about 2.5 R on win in the morning trade. That's all it is. So that's the chain. You see the first move, the hybrid chain, hybrid frog gets us working. Could have taken this one. My feeling was win was long. I wanted to see what else it would do. So we buy essentially the continuation. You're not wrong if you take this one. I decided to wait. I had a belief in the long side on this one because of the gap in the first move and the good news from the Fed yesterday, which Wynn responded to very favorably in the second half of the session yesterday. So I had certainly a long bias. I was not looking to get short this one. So that's Ken Long from Tortoise Capital with chain trading. And keep your risk measured and your powder dry.